Hey guys, it is Julie here with TipRanks, and today we're taking a look at 5 energy stocks that come in as unanimous strong buys. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we use the TipRanks stock screener to find 5 stocks in the energy industry that come in with nothing but buy ratings from Wall Street Analysts. And with these companies today, we have a range of price points from under $10 to above $100, so a price point for everybody's preference. We're going to take a look at these 5 companies, what it is that they do, and what Wall Street analysts are predicting for their stock's future. And I know we have 5 to cover, so I'll try not to take up too much of your time. Of course, you can check out the TipRanks stock screener for yourself over on TipRanks.com, and make sure you've downloaded the TipRanks mobile app as well by following the links in the description down below. Now let's get right into these 5 strong buy energy stocks. Starting off with our least expensive company today, we're taking a look at Crescent Energy. Their stock trades under the ticker CPG, currently priced just above $8 per share. Over the past year, they have seen growth of 21.5%, including growth of nearly 8% in the last 6 months. They do score a 10 out of 10 on the TipRanks Smart Score, with hedge fund activity increasing by 3.4 million shares last quarter. And as a bonus, they do pay a dividend with a yield just above 4%. Based out of Calgary, Canada, Crescent Point is a North American oil producer. Founded back in 2001, they're now one of the largest independent oil and gas producers in Canada. They focus mainly on light and medium oil production as opposed to heavy oil or natural gas. They have presence in southern Saskatchewan and Alberta, as well as the Williston Basin in the U.S. The company did post an earnings beat at their last quarter near the end of July, and the next report is due in less than a month on November 2nd. Analysts will be anticipating earnings per share of 32 cents. This is a bit ahead of what they reported last quarter, which was 29 cents per share, beating expectations by 2 cents. And of course, as I shared at the beginning, Crescent Energy is a strong buy stock. They've attracted 9 different Wall Street analyst ratings. The analyst's average price target comes in at $10.52, which would be a growth potential of 31% from current prices. Down below, we can see the most recent ratings in the last month range from 19 to 28% upside. Some of them from last month, fairly similar, 19 to a high end of 46%. Our second strong buy energy stock is Vistra Energy. They trade under the ticker VST, currently priced just shy of $32 per share. They've seen some great growth this past year, up 51%, including growth of 31% in the last 6 months. They also score a 10 out of 10 on the TipRanks Smart Score, with some bullish blogger sentiment and increased hedge fund activity. And they also pay a dividend with a current yield of 2.5%. Based out of Texas, Vistra Energy is in the electricity business. Vistra is one of the largest utility-scale power generation companies in the U.S. They have a capacity of approximately 37,000 megawatts, powered by a diverse portfolio including natural gas, nuclear, solar, and battery energy storage facilities. In their last earnings report near the start of August, they came out with an earnings beat, and this was their second beat following a string of misses. For their Q2, they reported earnings per share of $1.15, well ahead of the anticipated 88 cents per share. They had net income of $476 million and also narrowed their future guidance and raised the lower end. Their unanimous strong buy is based on 6 current Wall Street analyst ratings. And they come in with an average price target of $38, which would be a growth potential of 19% for the next 12 months. Down below, we can see a lot of those ratings coming in the last few weeks, ranging from 15% up to 31%, and a couple older from 2 months ago, both at 9.4% upside. Moving right along, third on our list today is Halliburton. Their stock trades under the ticker HAL and is currently priced at $41.62. They've seen growth of 42% over the past year, including some ups and downs here, and growth of nearly 24% in the last 6 months. They score an 8 out of 10 on the TipRanks Smart Score, and the stock also pays a dividend with a yield of 1.4%. Halliburton is one of the world's largest oil field services company. They serve the upstream oil and gas industry throughout the life cycle of the reservoir, providing products, services, and integrated solutions for oil and gas exploration, development, and production. They have a solid track record of beating earnings expectations, and their last quarter back in July was no different. Next, we'll be hearing from them on October 24th. For their third quarter, analysts will be anticipating earnings per share of 77 cents, which is in line with what they reported back in July. There they had a 2-cent earning beat, and you can see they've been climbing upwards for the last couple of years. There are 14 current analyst ratings, all coming in with a buy on the Halliburton stock. Those buy ratings come with an average price target of over $48 per share, which would be a growth potential of 16%. Down below, we can see several ratings coming in the last couple of weeks, ranging from 11% up to 25%. When we go back a little bit older, we do have a buy rating with an upside of 1.5%, which we've obviously gotten close to hitting that price target, to a high end of 35% here. And fourth on our list today is Schlumberger. Their stock trades under the ticker SLB, currently priced just shy of $59 per share. Similar to Halliburton, they've seen some great growth this past year, currently up 42.8% and 15% of that in the last 6 months. They also pay a dividend with a current yield of 2% and score a 7 out of 10 on the TipRanks Smart Score. Schlumberger is also an oil field services company. They provide technology for reservoir characterization, drilling, production, and processing to the oil and gas industry. They operate through 4 divisions with digital and integration, reservoir performance, well construction, and production systems. This is another company with a solid track record of earnings beats, and their next quarterly report coming up soon, just 10 days from now, on October 20th. Where Go Figure analysts will also be anticipating earnings per share of 77 cents for their Q3. Their last quarter, they reported earnings of 72 cents, coming in 1 cent ahead of analyst expectations. And this is another one that's been picking up plenty of attention from Wall Street, as their strong buy comes from 16 analyst ratings. The average of that strong buy rating comes in at $69.47, which would be a growth potential just shy of 18% from current prices. Down below here in the last few weeks, our price targets range from nearly 11% to a high-end price target of 38%, and from a couple months ago, a pretty similar range. We have one down here around 6% to up above 20%. And last but not least, our fifth and priciest stock of the bunch is Gulfport Energy. Their stock trades under the ticker GPOR, currently priced at $124.86 per share. They have been climbing up here 34% in the past year, with growth of 53% in the last 6 months. They do not pay a dividend and currently score a neutral score of 6 on the TipRanks Smart Score. Gulfport Energy is an independent exploration and production company focused on the Utica shale play in Appalachia. The company carries out drilling activities through horizontal drilling and hydraulic fracturing. Gulfport also has operations in land oil and natural gas processing facilities, which includes vapor recovery units, oil gas water separation equipment, and pumping units. Now, following COVID, Gulfport did declare bankruptcy and went through a restructuring following that. In their last earnings report, which came out near the start of August, they did come out with a notable earnings beat. For their Q2, they reported earnings per share of $2.66, well ahead of the anticipated $1.79. And the previous quarter had a pretty notable beat as well, though they do have a couple misses here in the last couple of years. Their next report is coming up on November 2nd. And despite the troubles in their past, analysts seem optimistic about the future. There are currently 6 buy ratings on the Gulfport stock. And their average price target comes in at $142, which would be an upside potential of 13.6%. Down below, our most recent rating came in just a couple weeks ago with an upside of over 26.5%. On the low end, we have one from a couple months ago with an upside of 5%, and the rest falling in between there. So there we have 5 energy companies all coming in with unanimous strong buy ratings. I know that was pretty quick, it was a lot to get through, but let me know which one of those caught your eye and that you plan on following up on more. I always appreciate hearing from you guys down below in the comments. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what those Wall Street analysts are looking at, providing some insight and entertainment. Make sure you always stick with your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.